So right now, please welcome Don from Berachain, Oxytocin from Paraswap, and Charco from, where is Charco? Oh, here it is. From Tplus, and they're gonna discuss DeFi growth. Please welcome them.
Testing?
Just a I can't be serious. Nice. We are doing a panel for ourselves. Huh?
We can see all the VS we want.
Yeah. Shall we start?
Let's test the microphones. Yeah, it's working.
Test. Okay, it's working. Nice. Welcome here to this panel. Thank you so much for joining here. Here with me, a bunch of people. We know Charco, Oxy, and George. He's not there, but he's with us right now. So let's chat about DeFi. Okay, from Folks, I see that all of you know about what is DeFi, so we can skip about the intro about what we are going to talk about. I'm Don, one of the product managers at Berachain, working mainly on smart contract, POL, proof of liquidity, and all this stuff related to Berachain. Berachain is an EVM competitor layer 1, launched in February. And here with me, who want to go first with the introduction? Charco?
Piacere. I'm Italian-American. I'm head of growth at Tplus. Tplus is an off-chain DEX, the first of its kind. We put a central limit order book in a trusted execution environment, so you get off-chain speeds, but you can delay settlement for when you want to settle on-chain later, which gives market makers more flexibility and results in the best price for users. Great.
Buongiorno. I'm Oxy. I am the head of DAO strategy at formerly Paraswap. Now we're Velora. So we're a DEX aggregator. We're now bringing an intent-based engine that gives you the best quotes on chain. And yeah, happy to be here.
And I'm George. I will be starting as the director of DeFi for the Near Foundation here in about a week. Previously worked at Gauntlet and Lombard. Love DeFi.
Cool. So guys, let's start from some basic stuff about we are talking about growth in DeFi. We have seen that in the latest 6 to 1 years, there has been a bit of a switch into narrative of what are the value driver for growth. We see many challenges that have been addressed in the last 3 years popping up and evolving. So the first question I want to ask you is how do you think the next 6 months will evolve in the DeFi ecosystem space? It will be more, in your opinion, a direction that is going more into something that is centralized or evolving into the CeFi stuff, or people is double down in decentralization? Who's wanna?
I think Bitcoin is a huge winner this year, and I think that more Bitcoin is going to be coming to lending markets and DeFi venues. As that liquidity unlocks, there's going to be a lot of usage of stablecoins. I think you're going to have high stablecoin APYs, and we're seeing a lot of activity in the stablecoin space. So that's definitely a growth trajectory. I don't see new tokens being as prevalent going forward. I think people are returning to old tokens with fundamentals and real-world assets that have real use cases.
Do you think stablecoin will give a switch to onboard more Web2 retailers into crypto, or will it be vice versa, so it will be crypto that will scale up and DeFi people will go into Web2 all the way around thanks to stablecoin?
So I can take this one because I just remembered that literally 1 year ago, or even less, on the last ETHMilan, I made a talk about stablecoins and how they were secretly taking over the Ethereum ecosystem. I was making some calls being okay, we saw the first hints of PayPal launching their PayPal USD. We had these tiny hints, for example, that stable market cap was actually growing to be higher than some of the chains that it was actually in. And now I think the actual IPO of Circle was really the boom to show that we are seeing a use case with stablecoins. Because in my opinion, the biggest blocker that we had up until now was this regulatory lack of clarity. everyone was scared of launching their own stablecoins because they were like, okay, what does the law have to say about this? Now we have Genius, which for better or worse at least puts words into paper about what we're going to be doing about stablecoins. We have Mika in a similar way. It came a few years earlier, but like it's still also like something that people get some clarity about. And now we're seeing like all these explosions of stablecoins, which now I'm going to try to make this more into a panel. For me, that's bad. Why? Because I feel that like everyone is going to try to jump into this opportunity of launching a stablecoin, basically to do the same thing that Starbucks is doing with its points, locking in assets, getting yield out of them, and then giving people the stablecoin to play with it. And in a way, I feel that even though that's going to look on paper like the DeFi ecosystem is growing, it's going to be actually adding a lot more friction because we're going to have a lot more stablecoins, and like it's not really going to be decentralized and modular, which are the things that we are excited about on DeFi. And the more people launch their own stablecoins to do like basically their wrapped T-bill products, the less use case we're going to be seeing from DeFi. I would love to be disproven with this, but that's my current take right now.
I think the opposite will happen, and stablecoin issuers will be forced to distribute the yield back to users to remain competitive. If you want to build a huge TVL, you have to offer something that USDT and USDC are not offering. And USDC and USDT are a very profitable business because they're taking all those T-bill yields. So in a competitive marketplace, I think we'll see that pass back to users, which is incredibly bullish.
Totally agree with you. So switching a bit from stablecoin to getting back to Bitcoin, I want to have your view about like all the product that has been created to create yield generation on top of Bitcoin. So the staking of Bitcoin, what do you think about it? Is it going to survive in the next years?
Yes. I think in general, we are going to start seeing a lot more abstraction of crypto UX, and there's going to be a lot of, sort of structured products built around any type of asset. So especially, stablecoins will start to evolve from just put dollars in, dollars buy T-bills, pass yield back to the users, to, potentially covered call strategies, even HLP is some form of a, yield-bearing stablecoin in a way. And so, we need a lot more different types of yield strategies. We need a lot more vault curators who actually understand how to do very sophisticated finance. And then we'll start to have strategies built out around every type of asset class. So with Bitcoin, I do think, Bitcoin staking is a very interesting mechanism, but we'll see even other types of yield strategies beyond that. I guess focusing more on just the explicit Bitcoin staking side, I think where Bitcoin is a very interesting asset for staking is that with your stake, you want an asset that is relatively low volatility and also a very robust asset in terms of market cap. If you look at a lot of the Cosmos ecosystem, if you have more volatility of your asset, you need to pay a higher staking rate in order to keep that asset locked up for a long period of time. Your product will be not as robust if you don't have a lot of security staked. And so, again, Bitcoin is a much better asset for these types of products. You can pay a lower staking rate and also just get a lot more capital locked up to offer better security. I think that's really the bull case for Bitcoin staking. But again, I think we need a lot more types of yield. Even within stablecoins, we do need to push beyond just this T-bill strategy. If we have 100 stablecoins and they're all just T-bill wrappers, like that's not that interesting. My 2 cents.
Yeah, totally makes sense. Some kind of diversification is needed, otherwise we all do the same stuff and then just one will survive. But I think that both stablecoin and Bitcoin are bringing a lot of a new use case that has been always like sidelined in the crypto world, that are institutional are coming, and they are looking for these new, more structured and fancy strategies. But do you believe that DeFi growth will bring, will be mainly based by institutional, or there will still be a lot of retailers playing the game? Who wants to?
So in a way, I feel that this kind of growth that we're going to be seeing from this institutional side, be it, I don't know, Walmart launching a stablecoin or something, it's always going to be secondary from the kind of retail-driven ecosystem that we're going to be seeing from DeFi. Because why are people onboarding onto DeFi? Because they want to have control of their assets, they want to make it as modular as possible, and they want to actually be able to know transparently what is happening. So on one hand, we're seeing this kind of like lower risk investors getting onboarded thanks to these like traditional real world asset issuers. But that should be, in my opinion, more of a proxy of the confidence that we're getting on DeFi. The real drivers are going to be coming from products like, I don't know, liquidity, for example, these kind of like real collateralized debt positions, or like even Bitcoin kind of like wrapped positions, because those are the ones that people are actually going to be checking, and most importantly are going to be, I mean, this is kind of the promise that we always tell, that we're going to be catastrophe proof, that we're going to have an asset that's going to survive no matter what happens. And these assets, the kind that like are right now driving all the hype with the traditional kind of growth, the traditional kind of onboarding, they work when we have trust in TradFi like we do right now. But if we actually want DeFi to have its appeal, we're going to have to need growth from these kind of more grassroots-based assets. Otherwise, it's just going to become NASDAQ, but with a few more steps.
Don, you mind if I queue up a question? User experience, I think, is huge for onboarding new fintech platforms like Venmo, Cash App. It's a great UX, and you can charge back. USDC, paying your friends with USDC is awesome until you send it to the wrong address, or you sent too much. And these types of little UX frictions, if you're totally operating in a decentralized venue and there's no centralized, Coinbase can maybe take it back if you send it to the wrong Coinbase account, something like this. Is there a future where we navigate through that, or is that finality of crypto transactions an actual problem for widespread adoption, and in the end might look like a centralized service, regular ledgering, and then settlement between large financial institutions using crypto rails in the end?
So, on one point of view, I do believe that some centralization could help a bit, because in the end, what we realize that, I mean, it's immutable, it's good, super secure, the fact that you send the money is there, but if you make some human mistake, you're totally fucked and there is no possibility to get it back, as you were saying. So this could help a lot to bring more retailers. This is very good for, let me say, feeling safer when transacting to blockchain, even though I do believe that the most stuff that the user experience should fix is the navigation instead of just like the tech side that is embedded. However, I mean, you are if you centralize a bit more, you are completely destroying the thesis of blockchain and the thesis of crypto. And that's one of the stuff that I was thinking about, is like, imagine Satoshi being here and listening to people saying like, you invented Bitcoin to destroy banks, and now the most bull cases that you have on Bitcoin is banks are adopting it. So I don't know. I mean, on one side, if you want to attract more retailers, you should change the narrative and go against players like Coinbase, etc., when they can recover the fund because it's centralized. On the other side, I mean, the main crypto purpose is like the immutability of the code that you're building, and the fact that everything is there, is written into a blockchain, is secured by the transaction hash. And so once you are there, I mean, maybe you need to accept somehow the human mistake of losing the funds, because in the end, that is what gives you like the most security about it, because that funds are there, assigned into a transaction, and cannot be like lost in another way, like we experienced in the past with some other sexes and stuff, where you were supposing to hold the money, but then the money were sitting in another place and were managed by other people, and in the end you don't have control of it. And this is something that can happen also in banks. So you totally remove this narrative from crypto, you are losing a bit of the innovation that you are bringing since like 2015, 2016. So I'm more bullish on accepting human mistakes instead of having someone else that I need to trust to operate into crypto world, like we do in banks, basically.
Yeah, you mind if I step in?
Yeah.
I feel that there's something that I can add to what you're saying, which I feel that it kind of changed my mind about how we're going to be seeing DeFi growing, but it's a harsh pill to have to swallow. The truth is that like the vast majority of people really don't care about decentralization and just want the simplest experience. We can try to remind them ideologically why it matters to have self-custody, to have like this kind of self-managed assets, but people are going to be struggling to understand it. People are going to be like, why should I make my own wallet, get my own assets when I can just open a PayPal account? And this, we have to accept it sooner or later. So the way that I see DeFi growing is this idea of like, we need to build an ecosystem where like we can cater for this 90% of people that like, even if they care about Bitcoin, they're still going to want to do it through like trusted mediums, such as, I don't know, a super hyper centralized rollup or something like this. However, still giving us the fundamentals and the underlying structure to be able to have the cypherpunks and the people that make the appeal actually be working. So using a bit more of a technical example, I feel that front ends are a very, very good example about why this is important. Most people will just be using a centralized front end to be accessing smart contracts. They will just be interacting with these things. But front ends sometimes break. You cannot actually access them. Sometimes front ends get like hijacked and suddenly they become like a wallet drainer. So I feel the real driver from growth is like you will always have these front ends. You will always have these things that like that 90% will like from the convenience. But you need to be able to still tap into the smart contracts to be able to, if you're nerdy enough to actually want to self-custody and actually cold contracts, tap into it, like kind of do like the short circuit and be able to access the things yourself. If we lose, I think that's the litmus test, in my opinion, the canary in the coal mine about how we want to be growing DeFi. If we lose the ability of like just opening the hood and be able to do whatever we want under the hood, then we've lost. We're okay having this 90% where like people grab the wheels, get the assets for you, but you always need to be able to have that escape hatch of like, you need to get out of here if you get the choice. Otherwise, what's the point? I don't know.
I personally keep a large majority of my wealth in Bitcoin, in a ledger, on the Bitcoin chain, with keys stored, sharded in multiple different locations. But that's pretty inaccessible. And when I'm spending money on a regular basis, I don't like paying in cash. I definitely don't use a debit card. I use a credit card. I want the ability to charge back, and I want to delay that settlement until I want to pay it off, 30 days. Like having that buffer is huge, and it's actually what built the entire modern financial system, is having under-collateralized loans, which currently are not possible.
Yeah.
So sort of jumping off of this in a different direction, I think there's two really interesting themes going on within the broader crypto sphere right now. One is we're seeing TradFi try to shove its way into DeFi, and then we're trying to have DeFi shove its way into TradFi. So, first one, we're starting to see like Apollo Private Credit, one of the best private credit funds in TradFi, now is tokenizing via Apollo ACRED. Interesting bit here, Apollo Private Credit has a $250K minimum deposit, and you have to go through pretty strenuous onboarding processes to actually access this yield. Does roughly 10, 11%, much better than T-bills, actually a really great option, but definitely has this like unbanked issue where you have to be pretty wealthy in order to access this yield. Apollo ACRED, 25K min deposit, you can also swap to acquire ACRED, and then you can also start to do levered looping of this via Morpho and potentially get even higher yield. Pretty cool. So I think, on one hand, that's a really interesting use case where we are seeing some amount of maybe institutional capture, but also DeFi improving traditional TradFi products. On the flip, you then also have sort of the circles of the world, which are definitely, rather than launching a token, trying to go into public markets. Some amount of this is really trying to seek new liquidity. If we do want to see DeFi grow, we do need to try to access more liquidity. 90% of capital is managed by a very select few amount of people. Those teams have, really strict compliance. They have a lot of different regulatory bodies that they need to be aware of and care about. If we do want DeFi to 10, 100x from here, we need to start to think about how those organizations work and how do we actually onboard that capital into DeFi in some way. So, I do think there's going to be sort of two realms that DeFi moving forward, where one, we need to continue to promote non-custodial finance. We need to really try to have, permissionless tech, but also we need to really focus on good product form factors that will drive that next wave of adoption, because it's not going to be cypherpunks that really 10x it from here. And then on the other side, we need to be very thoughtful of how do we actually allow TradFi and DeFi to integrate in more of that true TradFi sector, so that way they don't take over the entire industry and start to destroy a lot of the ethos that really built this tech to begin with.
Yep. I wanted to keep going for that one with the idea about being thoughtful, and also connecting with something you were saying, Charco, the idea about under-collateralized loans and this kind of ecosystem that's currently not possible in the world of DeFi. I agree, it's also cool to be able to get a credit card, or, I enjoy being able to access a mortgage. But on the other hand, just trying to get a bit of the flip side, this is more of an open question, but isn't that specifically what we're trying to avoid, like in the DeFi world, with making something more robust. Again, I'm not saying that I really follow this. I feel like it's one of the core principles of the economy. The economy is like debt-based. It's the idea of like being able to have something based on growth and then being able to pay it back later. But if you go to the first block of Bitcoin, everything started because they were talking about the chancellor doing another bailout for banks and doing this kind of system where like IOUs made the economy way more inflated than it actually was. And then when push came to shove, everything just came tumbling down. So I'm in two minds about this, to be honest. On one hand, I want people to be able to access this kind of like not over collateralized kind of finance, because that allows people to start a new business, get a house, get a safety, as you said, with the chargebacks. But on the other hand, it could start building an ecosystem where like if we start leveraging and doing this kind of like remortgaging over and over, we end up being in the same space as a couple decades ago.
Leverage in the system is always more risk. True. But you know, I was able to buy a house with $20,000, and I'm quite happy that I can own that house. And the only way that I could own that house is if there's always the threat of violence. If a guy with a gun will show up and put me in jail if I stop paying my debts. Bitcoin, Ethereum does not have a guy with a gun. You need a network state to enforce laws and to have under-collateralized lending. Yeah, there always has to be the risk that you go to bankruptcy court, you go to jail if you don't pay back your debts, etc. So I think a world where we go full Bitcoin standard is a world where utter and complete nation-state level chaos has broken out. We can't just jump to that, certainly not. I really like being able to store my wealth outside of that system. But if we were to reset to a place where only on-chain assets mattered, then the people at the very bottom rungs of society would have even less of a chance to escape because they have even less assets than anyone else and no chance to leverage up and, you know, take out loans to go to college. I mean, there's a million ways that you can get out of a lower socioeconomic class using debt if you're smart, and people will do it again and again and again, and that is the American dream.
Yeah, if I may add, it's generational risk. I mean, if you don't provide a loan for who need it, just because you need over-collateralization, the purpose of getting mortgage or getting stuff itself, borrowing itself is, I mean, it's less needed, you know? Why I should take a loan in a bank? Because I need that money. If I already had that money, okay, I can run DeFi strategies, for sure, like we do. But still, the purpose of the loan is not running DeFi strategies and fancy strategies, like having the money, invest that money, and get it back to the bank once I realize the stuff that I was planning to do with that amount of money. So it should evolve into under-collateralization, and probably like we can implement something like a proof of ownership. So I just assess that you still have some funds or you still have some form of revenues that are coming into your wallet on a monthly basis. If you can demonstrate there are stable cash flows there, I can under-collateralize your loan because I know that I can get that back in case that you're not repay that. But we are missing this portion of stuff that is like, how do I track and how do I make sure that this flow of money is coming month by month, so it's helping them to repay the loan instead of having over-collateralization. So this is, I think, one of the questions that still is unsolved, and probably getting more and more into the crypto world where like people is paid in crypto, people run stuff in crypto, people get revenues in crypto from protocols. For example, could be very good for DeFi protocols or for any protocol that's building on chain, demonstrating that there's like a source of revenue that is coming, like it is on chain, it's super easy to track. I demonstrate you have this source of revenue, okay, it can go lower, it can go up, for sure. But still, demonstrating this, maybe I can get like a bigger loan without allocating all my ETH and Bitcoin there and putting there like locked to have that debt, basically. So I don't know, I mean, still in the middle. I do believe that under-collateralization is something that will pop up in a certain place, in a certain moment. We'll start maybe for protocols and then for on-chain employees.
We actually already started with protocols. I know, for example, I think it was Aave DAO that like issued like a Go under-collateralized loan to one of the key protocols to be able to help with this. Don't quote me on this. I don't know if I'm quoting the wrong DAO, but I heard cases of this where somebody was issuing protocol tokens to another trusted entity to be able to help with it. So we're already starting to see the first steps of this happening.
Yeah, they are issuing protocol tokens. They are not demonstrating to have cash flows, you know.
That's the big question, yeah.
But yeah.
So, I don't know. I guess just to finish up this thought, I feel like you raised a very good point here that kind of raises a good use case for blockchains and DeFi, still within this kind of scary world of under-collateralization, which is the idea of actually being able to demonstrate transparently the kind of things that are happening. Because in the world of like traditional finance, there's already these black boxes. People have no idea how many reserves somebody have. People don't actually know who's sending assets to what. You don't know if they're just, we even see this like on centralized exchanges sometimes, like you see movements of assets and you know how much is actually being owned. So even if we don't crack the code of under-collateralization completely using DeFi tools, and we borrow some things from the traditional world, like a guy with a gun, I don't know, we still have the ability of tap into this idea of like, thanks to the world of blockchains, you can see exactly how much somebody's paying back with something, how much is somebody having reserves, and maybe this kind of transparency could help also assess how reliable some creditors are compared to others. We kind of started seeing this with like, I think it was Maker that was doing this kind of deals with real world assets. There's still problems with reporting from the real world back into the blockchain, but it's another use case that we could be seeing, the idea of like at least being able to see on chain whether something is happening or being reported or not, as opposed to just having to trust some paper.
Do you think credit rating will help this? Because we don't have a lot of credit rating at the moment in DeFi.
On-chain credit is one of those things that I feel has been spoken about now for like 5 years. It's something that is very, very difficult to crack because especially due to the problem of civil resistance, like the idea of like being very easy to make a pseudonymous identity and farming wallets and like passing it over, you don't know how many of these activities are actually genuine credit assessments versus somebody making 200 wallets, then giving the private keys so you have a fresh wallet with a good credit. So maybe it's going to become more doable when we start, I don't know, scanning your eyes on orbs or doing something like this. But then that's a completely different story. We're willing to lose anonymity on the blockchain to be able to assess this kind of credit scores.
My takeaway from this conversation that has been going on for 5 years, as you pointed out, is that we need these worlds to coexist. Full stop. It's a great opt-out to be able to store your wealth in a decentralized way in your ledger if you confidently believe that Bitcoin will be durable. It's like, to quote Michael Saylor, it's like owning the most pristine real estate in New York City in cyberspace. It's not a direct quote. But you know what I want to talk about? Mobile first, because it doesn't feel like enough people are building mobile first. Everybody has a cell phone. Around the world, people jumped from, no phone, no computer, everything straight to cell phone, and I still have to go to front ends to interact with DeFi all the time. Drives me crazy. Some of my most crypto native friends, I say, hey, Donald Trump just launched a meme coin, we're at a bar, and they can't immediately buy it. That's crazy. You should have a way to buy it on your phone. Otherwise, what are we building here?
Definitely, I totally agree. I mean, the first protocol that I was working on was like mobile first. It was like 3 years ago. And the thesis was simple. I mean, 80% of people around the world use mobile. You don't have all the desktop users there. But then the things that we were building, it was like super mobile friendly because it was like one of the things that I was doing most was trading perp on mobile 3 years ago. And people was calling me crazy. There was no security about it. I said, okay, that's fair enough. But if I have an easy trade that I want to do, and I want to jump there, and this is the right moment, I don't want to get back home or bring my laptop wherever. So totally agree with you that this is something that is super needed. And I think now the narrative is evolving very well in that direction. There are a lot of people building mobile-first stuff. It's not just a matter of front-end and UX thing, because another thing that is helping a lot is Spectra upgrade. Because with the new upgrade that Spectra launched on Ethereum, basically the EIP 7702, help you to go back on the narrative of the account abstraction. So wallets can create real mobile app now and allow people to have a Web2 experience trade, keep security more than before, but this will help a lot who is going to build on mobile because it will give you a total Web2 experience with all the Web3 infrastructure running on the backyards. So I'm super bullish, and I do believe that mobile should be more considered because in the end it's still like a niche topic, Not that many people is talking about mobile, and people is still thinking that who is mobile first is crazy because most of the people running stuff in crypto are on the desktop. Say, okay, now, but it's 1-2 years, maybe even less, and this will totally shape, in my opinion.
We can't build for the people that are already here.
And I feel like it's easy to talk about this when we're like 4 guys in a panel, but maybe it's more difficult to trust. If you want to trust something a bit bigger, just look at Privy. Privy is one of the solutions that like people got to access these things on mobile, and we have TradFi now buying out Privy because they see that there's going to be a growth avenue with the ability of like abstracting and being able to interact with these crypto ecosystem without even having to set up a wallet. Having to make a seed phrase is very scary, and we don't notice that because we're already onboarded.
Yeah, bullish chain abstraction, bullish account abstraction, front-end abstraction. We need to enable people to not have to deal with browser plugins and not have to switch between all the different chains, figure out where they can access the best liquidity. All of these little features or bugs that we are all very, very used to are just preventing people from getting onboarded. You know, if your mom can't do it or you need to sit down and explain it to her for an hour, that is going to prevent new users from coming on board.
My nonna bought Bitcoin last month on Robinhood.
Are we still early?
Yeah, nonna aped big at 104, so we're early. And then she kept refreshing the price. She's just like me for real.
One of us.
Yeah, how are we on time?
Yeah, we still have time.
They
Who
haven't run over to the front stage
No one
to
is
stop us, so
interrupting
we
us.
can keep going, I guess.
Exactly.
Let's see, we talked about mobile. Yeah, I would love to take some questions from the crowd. This young man with the handsome mustache. Let me give you the mic.
I have a question for the panel. Without saying stablecoins and without saying mobile, because Charco loves mobile, what are you actually excited about this year? Tell me something new, exciting. We're all here for alpha. Try not to repeat yourself, so everyone has to give an individual answer.
I have a very nerdy answer to this one. I've been seeing some very exciting multi-dimensional AMM designs that allow you to like actually juggle around with dozens of different stablecoins in a single pool. I feel that the current AMM mechanism is like years old by now, and we have this traditional like, I don't know, uni pools, we have this like 50-50 pools, we have like concentrated liquidity. But the stuff that I've been seeing, this technical proof of concepts where you have like, I don't know, 10-dimensional pools with weird shapes or spheres where you can incorporate all these different assets. It sounds nerdy and it sounds like one of those things that like we just like to geek out about. But if it does what it actually promises to do, you can actually have this constellation of like 100 different stable coins all paired with each other and being able to be swapped in a single liquidity pool. We probably won't be seeing anything close to a working product for the next couple of years. But when it comes out, we might be able to see a lot more cohesion with all the stablecoin explosion that we're seeing right now.
Yeah,
He
imagine.
did say no stablecoins, that's true.
Oh, yeah, I heard specifically stablecoins. I'm sorry. Then in that case, intense. Intense is the idea of like taking away the complications away from the end users and being able to execute on behalf of someone. That's one of the things that simplifies. We have mobile. We have the intent to make people not have to pay for the gas manually, think about MEV, think about chain switching, and it's really going to be helping with the best executions. So that's something that I'm also really hyped about. There you go, two answers because I don't know how to listen.
And
Yeah.
we should give them also an alternative about their bank deposits. Stablecoin can play a pivotal game there. Because in the end, everyone has bank deposits, is deposit their money in the bank, paying the bank for that. With stablecoin, you can get money from them, because in the end, you are lending the money to the bank right now for free. With stablecoin, you will lend the money for a yield. And this could be another stuff where like we can tap like a huge market that is totally uncovered, and no one in finance has been, let me say, played the right game, so maybe DeFi can play it.
Guys, please think of questions. We'd be happy to answer them. I feel like the U.S. government is starting to wake up to the fact that you can export the U.S. dollar via T-bills to the entire world, the entire developed world and undeveloped world via stables. So that's actually a huge catalyst for the United States and for DeFi ecosystems that I'm super excited about. My answer to the question, I'm actually really excited to see how Mega ETH's launch goes. We've seen a lot of chains launching recently. Haven't seen a ton of success from any new chain. I think the last successful new chain launch, correct me if I'm wrong, was Base. That was quite some time ago. Mega ETH has a lot of interesting products like Euphoria, which is a gamified tap-to-trade options protocol that I'm extremely excited to use. And they have the theoretical second best central limit order book in GTE. So that should be a great liquidity venue. I think CLOBs are super useful and exciting. I think we need more spot CLOBs on chain is pretty cool. They're pretty fast, 15 millisecond block times. So it'll be really interesting to see what kind of liquidity you can get there, if it's actually a better trading venue than an AMM or using solvers. And then final thing I'm really excited about is Tplus. Tplus.cx, go look it up. It's pretty complicated, but it's a CLOB and it's fast.
Where is he?
So
Which
glad
chain?
you asked. I'm so glad you asked. It's off-chain. It's an off-chain decentralized exchange. We put a central limit order book in a trusted execution environment. Verifiability, so you know that you're interacting with the correct code. We can't manipulate the code. We can't hunt your stops. We're not Binance. We can't touch it. It's just running in a black box, but it's running very fast, 1 millisecond execution. And we have a very nice margin engine that allows market makers to essentially have the most flexibility in terms of settlement and capital efficiency. So what you end up with is every AMM, any on-chain liquidity venue, GTE, P2P flows, OTC flows, RFQs, centralized exchanges, all can be quoted against with inside the Tplus platform. So you get the best price across every chain, across every centralized liquidity venue. Anywhere there's a price, we'll quote very close to that price on Tplus, or our market makers will. And then you settle up on-chain after.
To give a different answer, I go exotic RWAs. I think in a few folds, you know, on one hand, there's a lot of very boring private equity funds that just print money, especially in bad times. You know, some of them 20% plus yields, even better than a lot of DeFi yield, not tied to the recession or other, you know, markets in general. If we can start to actually bring that on chain, open it up, like I got into crypto because I wanted to like bank the unbanked. And so let's start to actually bring access to these types of investment options that people can't get right now. I think additionally, I would love to start getting perps for commodities, shout out to Ostium, energy capacity, compute costs, et cetera. Like, let's bet on everything. And so I think as we bring more of these types of markets on chain, you know, we can play more games and more sophisticated games. We can also start to cater to some of these TradFi firms that have really sophisticated data models. Like Jump is doing a lot of prediction market volume because they just have the data. And so, you know, let's try to cater to those types of folks. You know, get away from meme coins. Love meme coins, but there's a lot more that we can do.
Any other question?
Yeah, I'm very shy as an American, so I'm going to keep asking follow-up questions unless another Italian feels the need to stand up, which unlikely. Well, I have two questions. I want to respond to what you guys had said. I guess I'm the impromptu moderator. I think a lot of people talk about retail. You guys both mentioned bringing retail on chain, and you also mentioned gamifying trading. I think both of those takes are stupid, and I'll tell you why, and I want to hear your response to it. I don't think we should make things more complex than they need to be. Trading, you don't actually want to play a game in order to place a trade. You want to place your trade as fast as possible. And I'd love to hear you debate that, and I'd love to hear comments on why we should be gamifying on-chain things. Whenever I hear someone talk about gamifying a trading platform, I think it's silly. And then the second thing I want to say is a response to George on bringing retail in. I think we should bring retail on chain. It's also why I got into crypto and Bitcoins, you know, libertarian ethos of unbanking the unbanked. But giving retail access to exotic instruments seems dangerous. I'm for that. And I'd like to hear why you think we should be offering exotic options to everyday people who don't know what perps are.
I think there's only a couple things that have PMF in crypto. one of them is gambling. And whether you call it trading, you call it meme coins, you call it exotic options, there's a lot of different form factors it takes, but it's pure speculation. We have to agree with that and understand it, and it's fun. Have you gambled on chain? It's very fun.
That doesn't mean that it should be gamified. Because in the end, the people when trade want to feel smart. So there has been a huge winner in the space who just put, his vision was like, okay, it's gambling, it's for everyone, but it should look professional. And they won. And we know who is it. It's Hyperliquid. Come on. They did a very, it's not complex in the end. It's very user-friendly, but feels like super professional when you trade on Hyperliquid. So even newbies are feeling like to be professional traders there. And this is what crypto people want, because I mean, DeFi 2020 was like super nerdy. It was like, oh, I need to study stuff, understand stuff, etc. Then he pivoted into meme coin, and now people want to trade meme coin, but doesn't want to feel like, okay, I'm stupid, I'm trading meme coin. It's like, oh, I'm smart, I'm trading Bitcoin. So I think that professional UX, user experience, is like still winning the game versus gamification. I mean, this is my own thesis.
So perps are definitely like a more sophisticated form of gambling, but I think you just watched James Wynn put on a master class in degenerate gambling on a very professional looking platform. And on the other side of the spectrum, you've got brand new coins being launched on Pump Fun at 4K market cap that run to 200K max, or they rug right away. I mean, that's still a fun form of gambling that a lot of people indulge in. Yeah, there's two very distinct different forms of gambling, but there's a place for either one, and there's also a place for more fun, gamified ways to gamble. And also like casinos, on-chain casinos with VRF, like that's gamified and it's gambling and it's fun and people lose money, it's fine. It's entertainment.
Plus one to that, and I guess to give, how do we ensure retail doesn't like die by coming on chain, especially with like more like exotic RWAs? I think in one respect, it comes back to like having some amount of like a risk curator. This is where I do think vault products and more structured products, like call them maybe synthetic dollars versus like a stable coin, where, even like an Athena, you have someone that understands the risks, is able to run the trade properly. You can start to access the yield without necessarily even knowing how to do a carry trade yourself. That's cool. Even sort of going into private credit. So, Apollo Private Credit, blue chip fund, they're very good at credit. There's a lot of other players within the TradFi space of private credit that are more or less toxic waste right now. They gave a lot of very large loans to businesses that didn't deserve them in like 2020, 2021. They are feeling the pain right now. All of those folks also want to tokenize their funds. If you don't know the difference between what an Apollo private credit and a non-Apollo private credit looks like, you might get hosed. But there's risk in anything where you potentially have upside. So I do think adding in some amount of a risk curator level, probably via a vault type product, is going to be very net positive. And if people can get rich on chain, the chain will continue to grow.
A very gauntlet coded answer.
I just want to add a bit of a caveat, and I don't know then if we have to wrap up. I feel that we have to be careful with like the things that we see online and the attention we get of them just because they're entertaining versus the kind of use cases that we end up actually seeing on chain. Like, it's very funny to watch a guy round trip his way up of early retirement and then like lose everything and say that the matrix was against him. And that's what we end up seeing that are the only use cases. But while these people are just like gambling and going around the casino and like round tripping, there's been a lot of use cases that are extremely boring but have really been unlocking uses for a lot of people in the world of DeFi. I'm less connected to this kind of world, and I'm more connected with, like, for example, the global south, because that's where I come from. And I know a lot of people that come from currencies that are nosediving, that even when the dollar is weakening, it's much better to have a stablecoin dollar to be able to pay your groceries, because by law, for example, you're not allowed to have real dollars in your bank account, as opposed to doing something else. And crypto has really been helping that. I know friends that had to escape war zones, and it's much easier to run away with your assets with a single ledger in your pocket, as opposed to trying to move all the different assets. Like, even if it's not a war zone, when I moved from one country to another, when I had to move my bank accounts, it took me like 3 weeks. My crypto was done by the time I got off the airplane. So it's very boring use cases, but I kind of want to wrap this up to see, like, there's still these things happening. It's still possible, for example, to like if you're more bullish on euros instead of dollars, you can just open a loan on Aave and make a killing if you get these kind of things. And you don't need gamification for that. You don't need gambling. They're quietly doing a revolution that we don't notice about. And it's so boring that it goes from one moment never happening to the next moment being kind of a standard. I remember a few years ago, it was impossible to buy anything with crypto. Now I just have a Gnosis card and it off-ramps without any problem. But nobody talks about it because it's extremely boring. I'd rather see James win. So let's see what other boring things are going to be happening. And just keep that in mind. If you're working crypto full-time, have fun, because then you're going to be looking back in DeFi summer and be like, I wish we could go back to those food farms. But also keep an eye on the boring stuff, because the boring stuff is the one that sticks, and you end up discovering, wow, who knew that actually still works? Yeah, I don't know if we have time, but thank you for coming.
Yeah, let's wrap it up. You still have 30 minutes to have some proper food. There is lunch outside, so we are slightly on delay, but not that much. Thank you so much, guys, for joining this panel. It's been a super pleasure chatting with you. I hope you enjoyed, guys. Enjoy the lunch. See you at 2.